Good evening, ladies and gentlemen, and welcome to today's webinar with Admiral Markets. Chris is with me, and we will share with you practical tips and methods to overcome fear when trading Forex and CFD. So I know that a lot of people actually experience fear when trading, and that is a common subject, especially for new traders. But we are here to guide you, not to have fear. We are always there for you, and you can see that we are always having live trading webinars. One of the reasons why is that we also want to instill a normal, I cannot say courage, but let's say normal feeling when you trade. Because as soon as you become over emotional, as soon as you become feared, your trades will, well, 90% of the time will go wrong way, and you will start to revenge the market, and that's one step closer to losing the whole account, and of course you don't want that to happen. So before we begin, standard risk disclaimer. Explain, this is me and this is Chris. So we are your hosts, and risk disclaimer says that CFD and Forex trading are leveraged products and can result in losses that exceed your deposits. So trading always involves risk. So please read the full risk disclosure on this web address. So we will talk about different types of fear in trading. We will talk about symptoms, of course, how to overcome the fear. Everything will be covered, and this webinar will be interactive webinar. So Chris will jump in from time to time if he has something to add, if he has something to say also. So we will make it a little bit interactive. I think that it's a bit interesting subject. So also if you feel that anything is not clear or you want any additional advice, please do not hesitate to ask us during the webinar. So types of fear that we usually experience are fear of losing money. It's a very common fear, and many new traders usually have so-called paralysis of analysis. Then we have a fear of missing out on a move, also very common fear. And I think, in my personal opinion only, this is very common type of fear, and traders usually jump in a freight train when they miss out a move. That usually happens when price is, let's say that the price is going up and you know that it still will go up because momentum is very strong. What you usually do is you jump in, you jump in here instead of waiting for the market to come lower to buy the dip. Actually, we have a lot of examples, and you can read a lot of examples across boards on Forex Factory. I also wrote about fear. Chris and I did some blogs about it. You can read on Admiral Markets website. But what I have noticed on Forex Factory is that a lot of traders who dwell there on daily basis usually don't have a clue how to trade the price properly. And I tried also to explain that intraday news simply will not change the trend. Those news that happen each day, call it, let's say, everyday news, will just give us a better price to buy into the market. So do not have any fear of missing out on a move, because whatever happens, if there is something, let's say, happening currently on the market will proceed with its trend. It's normal and it always happens. So I will show you an example now. This is the example here. You can see pound yen. I told you that I will go long pound yen, and this is what happened today. You can drop down to 15 minutes and see what happened. After the ADP was announced, equities were sold, and of course, pound yen always goes together with equities, and you can see from the top to the bottom, but I actually entered the market somewhere here, and I traded the price to the long side, pound yen. So just that intraday news that rejected the price, actually just it served our favor because pound yen is in uptrend. It's a strong uptrend. And this rejection simply was, you see, this is again the POC zone here. It simply served us to give us a better a better buy trade because we are going with a trend. We are going with the flow. And here you can see easy pips. I mean, I have said it a lot of times, and I will always repeat it. Intraday news. I'm not talking about some out of the blue news or some announcements, but some data, important data that comes each day. Usually, when trend is strong, these news will give you the possibility to enter the trade at a better price, and that is the fact. It always happens. Just watch what Yen did today, and everything will be clear. Watch this. I mean, this is very strong. And also, euro dollar told you it will go up. I mean, if you follow the analysis and webinars, you see I mean, clear uptrend. This is not rocket science. This is just, you see, very basic pattern that happens always in the Forex market. That is why we really prefer to trade Forex market. And that is why Chris and I always will be there for you, not letting you down ever. So you can always have the faith, full faith in us. Okay, let's move on to next thing, and I think Chris will add after I finish with these two parts because I will ask him what he thinks about these types of fear. Fear of letting a profit turn into a loss. It's also a very common fear where traders simply close their trades prematurely instead of letting their profits run. And what happens there? They lose. But you should never ever be sorry if you use, let's say, profit stop, because profit stop it's different thing. That is what also bank traders use to protect their profits. I used profit stop before yesterday FOMC on euro dollar, and I made pips. Today I also longed. I made a scalp long on euro dollar. So it's okay. I don't grieve because I haven't made 100 pips on euro dollar. I made like 50 pips overall. I'm still okay, but you should never have a fear that your profit will turn into loss. Simple remedy is just use profit stop. Once you're, let's say, 20, another 20, doesn't matter, guys, number of pips. Watch the ATR. The ATR is important because if euro makes 60 pips per day, pound yen makes 160. So if you protect your profits after 20, 30% of ATR, it's still good because then you will be riding a free ride. And there are different techniques how to protect your profits. So don't think that protecting your profits is the same for euro dollar and for pound yen or pound New Zealand. Because pairs that make 60 pips, let's say 30%, it's like 20 pips. But pairs that make 160, it will be like 50 pips. So when pair makes 20 or 50 pips, just make a profit stop. And don't have a fear of being wrong. Everyone is wrong from time to time. We are also wrong. We also lose from time to time. But because we know where to enter and because we have a very strict money management, well, we are mostly, every month is mostly on our good side. I don't care. Sometimes it's 0.3%, sometimes it's 3%, but we don't risk much. We earn percentage. Well, that is how professionals do. I know a lot of people will ask why you don't then if you're right 90% of the time, why don't you use bigger leverage? Simply because when you trade intraday, some unexpected out of the blue announcements or news or but not announced news, but something that can happen instantly can totally reverse your trade because you're trading on intraday time frame. And because of that, we always try to protect our profits by using profit stops. And because of that, we also use low risk. Low risk will save your account from bad drawdown, the drawdown that you cannot recover from. It's very hard, I know. But if you use low risk, 20, 25% of drawdown can easily be managed. So I think Chris also wants to say something. Chris, hi, I think that you are with us here.
Yes, indeed. Definitely. Yeah, the fear, of course, I mean, everyone has their own fear, so there's so many of them indeed. I think best is probably that everyone kind of evaluates themselves, maybe even asks someone else to take a look and discuss it with them and see what is their fear that is driving them, because I think that there are many reasons, and sometimes you got to dig a bit deeper, but eventually you'll find, I think, the reason why you might be fearful in certain situations. Maybe it's too much risk. Over risking, I think, is one of the big reasons. Maybe you're uncertain about the entry or your strategy and you need to do actually more testing. So those are just a couple of examples, but yeah, there could be a ton of them indeed. But drilling down and kind of finding let's say the root cause in a way, is a good practice, definitely. Neda, did you want me to
Yeah,
show my
I mean, yes. If you also have something to add from your slides, feel free to use slides also, so we can
Oh,
comment
it's okay.
together.
Yeah. Not at the, well, maybe. Let me share this right now, indeed. Let's see. But I would need to take it over, indeed. Okay, one second. Sorry, it's a bit slow, but there we are. So indeed, it could be basically, the reason why we fear is an instinctive reaction. It's not even that bad necessarily, because we're reacting to danger, right? And so it's a warning signal, and it does keep us focused from that perspective, which is good. And it's not all bad. I mean, in the past it was quite useful, in fact, when we were basically more vulnerable to, if we were in the hunting gathering society, we were a bit more vulnerable, of course. So, from that perspective, it does keep us focused. But if we are too fearful, then that is not good either, because then we freeze, we're in panic mode, we have a bias, and we don't have a clear vision. So that's maybe just what I wanted to add with regard to fear, that, if it's too fearful, then the edge that we might have from being sharper, from being more focused, kind of get lost, because we're like, we freeze up. We're not free to think. We're not flexible enough to react. And then that's not good, because then we kind of even our body, you might see it physically. You might be not breathing properly. You might be glued to your screen 10 centimeters away from it because you're fearful. So these are physical signs. You might start to sweat even. So yeah, anything like that, of course, then you're not in the best kind of position to make decisions. You're not going to have a full kind of thinking capacity that you can use to say, hey, this is good, this is bad, because you're just reacting emotionally in that case, and that's something you want to avoid. So I think we'll talk about that a bit more now. Give it back to Neda.
Yeah, I
There
agree.
you
I
go.
agree, Chris, with you completely, especially for those physical signs. And here you can see there are different symptoms when you are feared, especially when your trade is going from a winner to a loser. And then definitely you will start to cut winners short in fear of giving profits back. That is a common fear. And I even know some professional traders that are not immune to this type of fear. But the main problem is here, it's not like the traders, those professional traders don't know what to do in that occasion. The biggest problem is that they actually try to revenge. So they will cut their winners, and if they see that market is going in the same direction when they cut a profit, well, they will start to reverse the trade. This is how it happens. So let's say that you went long, right? And suddenly instead of 50 pips, market drop down in a second and you have 5 pips, right? It happens. Well, you know that it happens. So what most traders will do, they will cut the profits and then they will instantly reverse the trade in the other side. Even double with double the risk. And that is called revenge, because they are now they hate the market because they lost 40 pips in the second, and they will enter a reverse trade with double the original risk. And what happens usually? What I said, correction. Market will correct, and then fresh buyers will jump in. Why? Because the trend is there. If a strong trend is is in place, uh, this temporary retracement traders will use to enter fresh buy position. And that happens, guys, and that happened definitely in euro dollar. That is what I was saying, guys. Euro dollar. Watch the euro dollar. This is euro dollar. Chris and I told you that this could be actually long trade, and it was a long trade simply because institutional traders, they use this simple retracement, a slow grind towards the POC zone to enter a long trade. And I saw a lot of different opinions that now euro dollar will tank towards parity, towards 1.11. I simply don't know why, how it might happen, because euro dollar simply made a new high recently, so it still wants to retest that high, and it's normal that it actually has been bought from the POC zone. So always try to look at the bigger picture. Also, what traders do is hang on to losing trades because uh, they fear taking the loss. So it's very common fear that when the account is dropping, they will hold on to losing trades, hoping that one day trade might reverse. That is called hope trading, and that is not good. That is not correct way to trade. They can jump into unplanned trades because they fear leaving money on the table. Chasing in the market and chasing the market is not good. Okay, so you should forget a perfect trade. There is no perfect trade. That is process. You should be able to focus on the process. If you are here with us, if you're trading with us, if you're reading our analysis or watching our webinars, you should be focused on the process itself. Uh, Sit by your computer, wait for a trade to come to you, act like a perfect trader. It means wait for the market to come to you, then set a trap and then spring the trap so you can trap the pips. I always compare it to the shadow, and I always say market is like a shadow. If you try to chase it, you will never catch it. But if you stand still, the market will definitely come to you. So guys, don't forget the process. When market is in uptrend, you want the price to be oversold to buy it. When market is in downtrend, you want the price to be overbought to sell it. You cannot go wrong with that principle. What can happen the worst way is that there is still will be some more, let's say, buying until trend reverses. And I showed you the example on live trade yesterday, on Wednesday live trading webinar. Do you remember what happened with dollar CAD? I sold dollar CAD when 29.65. Then I sold another trade, 29.90. My stop loss was 30.25. Dollar CAD went to 30.14. It dropped to 29.57 when I closed the trade. So from the first trade, I made 8 pips. From the second trade, I made 33 pips. So it's like roughly 40 pips on dollar CAD, but I didn't move my stop loss. That is why I said focus on the process. Forget a perfect trade. Maybe for some people that was not a perfect trade. It was a standard trade. Standard trade that we do if you read analysis and watch our webinar. Be focused on pips. Don't watch just the money, because if you're watching the money, you might pull close trade trigger soon. Because if you see that you made 2,000 euros with only 10 pips of profit, wow, that's a lot, right? If you made, I even witnessed when I traded uh, together with in investment account. I saw it was a big account, and I saw really like 3,000, 4,000 euros happening in a couple of minutes. So a trader who I traded with actually was very focused on the money, so he tended to close his trade after 5, 6 pips, because the amount of money that was traded was a big, that was a bigger money, right? So it's much better to be focused on pips, because if you're focused on pips, then you will forget about money and you will be focused on the process. Okay, so these two are interconnected. Okay, don't be focused on money itself. Be focused on pips and start to increase the risk slowly. What it means is, when you start to trade, be focused on low risk. when you get the experience, you can raise your lever. I usually start with 0.5 risk because not I have big experience in forex trading, but still I want to I want to have my first trade very low risk, because then if I'm stopped out for this 0.5%, then I can always make up with 1 and 2% trade, and still if I lose 3, I would only use 3.5% of trade. Also, why I'm focused on that my first entry is, let's say, with a lower leverage, because then I can scale in, as I did with dollar CAD yesterday. The first zone, I will add 0.5 risk. The second zone, I will add 0.5 or 1%. When I'm in profit, I will make, my profits will exponentially rise. If I start to lose, my profits will exponentially drop. Not profits, but losses will be exponentially lower, because I use so-called scaling in. It's a great technique. Take occasional break, step away from the screen. If you feel that you will make a revenge trade, just step away from the screen. Do not do revenge trades, because if you do it, you will definitely lose. Just a matter of time. Chris, do you agree with me? Revenge trades. When people make revenge trades, they will lose. We know that. We experienced it many times. We receive so many
Oh
emails
yeah.
thanking that traders are thanking us for making them on the right path of forex successful trading.
Yeah, no, absolutely. I mean, I had the same when starting out. Revenge trading cost me so much, and that was my wake-up call, and definitely that was my learning lesson, never to do that. So luckily, that was such a big impact on me that I did manage to avoid it after that. And I think, I guess you have to kind of push yourself to avoid it, otherwise it could be, yeah, you could risk, of course, too much of your capital, and you might feel that you should stop, or so. Yes, very, very important to avoid that. I guess everyone is going to have that moment where you learn a kind of a big lesson. Just when you do go through that, just see it as part of your educational cost, and try to not beat yourself up too much. At least try to learn. More importantly, try to learn from it. Move on. Try to really implement every day that you don't get to that point, that you don't cross that border. If you do that every day, that's the most important, because if you cross that line, then you just go into, it's like a spiral. It's difficult to get out of it, and most likely you're not. So just keep that in mind. And if it does happen to you once, just see it as a kind of like a educational cost. But best is to avoid it, but many of us are not going to avoid, at least once happening, such a revenge trade and costing a big loss.
Yes, I definitely agree with you, because I also know, few professional traders who also revenge trade from time to time, and it's more like psychology. It's a psychology issue. It's not like they don't know what to do. They don't know how to place their stop loss, or how to catch their positions, or what to do in order when they start to lose. But it's more like psychological process. So also what I want to say, guys, you should try to, if you really cannot break that bad habit of making revenge trades, you should get a robot, an expert advisor that will, let's say, hedge your trades once you're in losses, and with a balanced strategy, your losses can be turned into profits. But you really need to take a bit of math into the account, because if you want to do a so-called grid hedging, or let's say imbalance hedging strategy, that expert advisor really need to be good with algorithms and math, and we might make that kind of expert advisor soon. So we will see. It's a bit of job, a bit of business to do. I mean, it will take a lot of time, but we know the math, we know how to do it, and it might be one step to solve the issue of trading with revenge, because then you won't be trading anything. If you have a lost trade, expert advisor should actually manage your trade, but your drawdown really needs to be less than 25%, the overall drawdown. I know it's hard to believe in expert advisor, but sometimes is the only way. It's the only way to stop losing, because I really know so many traders from Forex Factory and other forums and other websites that I'm actively participating. Well, most of the time it's Forex Factory. So simply it's revenge. It's revenge trading that kill their accounts. Angel is saying that he has a lot of examples, and his first two accounts was because of revenge trading. I know, Angel. I mean, it's not like you. Chris and I did it also when we were beginner traders. But this is why we have these kind of webinars, and the traders can always learn from their mistakes. And what we are trying to tell you, it's always from our personal mistakes and our personal experience. And we want to tell you that you should not do that. How to overcome the fear? You need to know how to handle your emotions, because fear will carry over to next trade. That's for sure. Fear is very contagious. It's viral, and it will carry over to your next and next trade after that. Greed is the opposite. It's like taking too many trades. So I know that fear kills the opportunity, but greed blinds us to danger. The fact is the end result of these two is the same, because fear will kill the trading opportunity. It's called paralysis by analysis, while greed will blind you to danger, and that is like fat finger. You are pulling too many trades because you are so sure that you cannot lose, and you have a big self-confidence, too high. You're overestimating yourself, and that is very dangerous, and that can kill your account the same as fear. It's basically two opposite things that do the same thing, killing your account. Experienced traders sometimes pull the trigger too often. Well, it's also the fact, and I definitely need to say less is better. Taking less trades, but cherry picking trades is much better. So I think that we definitely need to follow the strategy which will tell you when to enter and exit. Okay, you should always try to lower the risk on your first trade. Use visualization techniques to take focus away from the possibility of losing. And very important thing, if you're still not able to do that as professionals do, okay, that's very I can say subjective. Okay, we're working on a new blog, and it will be definitely shown soon. You guys need to go to strategy tester, that is a part of Admiral Markets, MT4 Supreme Edition, and definitely try to download the Expert Advisor. Try to test your strategy. We will write about how to use Forex Strategy Tester, because it can test every single strategy you make with an expert advisor and show you the result. That is what we are currently do on our Master Candle Expert Advisor, but also you can do that. If you cannot backtest yourself, let the expert advisor do that. I don't really have anything against the expert advisors, as long as they are coded professionally, and as long as you, the human being, follow their principles religiously. Okay, you really need to be very strict. Okay, still try to visualize that your current position might become a big winner, a grand slam. If you do that, you will be able probably to influence that your trade somehow become better. It's some sort of quant science, physics, but it works from time to time. And very often, the only thing why it might not work is because you take too many revenge trades, too many reverse positions, instead of focusing that your current position might be a win. Chris, do you remember when we interviewed a trader, and he gave us some answers that I wrote here? What is the worst that can happen? Stop loss. I mean, this was very clear answer from a professional trader, and pretty much this sums it all. Stop loss is the worst that can happen, right?
Yeah, definitely. That's the worst can happen. Not using it is horrific for your account. I mean, then you're really exposing everything. So definitely, if that's what is that what you meant?
Yes, yes, that is what actually we always do, because some traders don't want to use stop loss. Some traders always say, we will use low risk, but we will not use stop loss. And then psychology kicks in. When they see those 100 pips down, they will instantly reverse the trade with double the position. So stop loss is the worst that can happen. It will not kill your account. Okay? So
I
what
think
is
it also has to do with the fact that you kind of get same like revenge trading. You kind of get blinded about what's happening with reality. It kind of sucks you in further and further, and you almost lose kind of the sense of what's really happening. You just focus on getting back what you want. It's just you come out of you lose contact with reality. Really, it's a weird feeling. You just kind of lose um, sight of what's going on, and then after the fact, you calm down and you look back and you think, oh my, what just happened? It's like almost you're being taken over by this revenge trader monster that's that that's looking for pips and just can't seem to control that in the end.
Yeah, and instead of thinking what is the best that can happen, I mean, TP hit, that is the best that can happen. So think about it. Don't think just about the worst, because if you cannot accept the worst, you should have not taken a position. But if the worst happens, you will still be okay. There is nothing to fear of. Stop loss is there to protect you from further losses. Don't forget it. But if you risk 5 or more percent per trade, that is where no one can help you, because your psychology will kill your account. That is that is the worst thing. It's not stop loss. It is your psychology. And what Chris and I always say, try to open a small live account. Forget about demo accounts. Demo accounts are good if you really want to take, let's say, on trading with 50,000 euros or 100,000 or more, then open a demo account, test how it goes. But if you want to deposit 1K, 10K, whatever, well, try to open a small account, small live account. Trade 500 euros, but trade with micro lots. It's the same. The principle is the same. But instead of micro lots on 10K, you will be trading, let's say, normal lots. So if you can make the profit within the risk limit, you can do the same with more money. It's always the same. It all boils down to a proper money management. If you cannot trade consistently with $50, well, then guys, I really need to disappoint you, because you will not be able to trade with 1K, 10K, or 100K. If you don't know what to do, open a small live account, open 200, 300 euros, and then trade 0.01, 0.05 lots. If you can make something out of it, some small money, then deposit more and trade like professional. Try breaking your position up into 3 smaller positions for the same trade. I showed you that yesterday on live trading webinar. Dollar CAD. And I said euro dollar. I would do this. I would have done the same with euro dollar if the price had pulled back to another POC zone that I showed you. It's very easy to do that. It's very easy to do that. Start for smaller lot sizes, gradually move up. Risk 0.5 to 2% per trade. Do not risk more than 5% per day. Not per trade, but per day. So if you take a trade of 5%, then you lose it, stop trading for that day. Okay? Reanalyze your whole trading psychology and philosophy from grounds up. If you still cannot make money, think what is the worst that you do and analyze yourself. And I always recommend the book Trading in the Zone by Mark Douglas. Chris, I also remember that you read a lot of psychology books, and I know that you also mentioned some good books for traders who are still not being consistent. I think that you and I are also very close to finishing our psychology book, a small PDF, right?
Yeah, definitely. That goes about. It's a bit smaller, of course, than the trading in the zone, But I think it's a good starting spot. I think it kind of covers the basics and dives into, I think, some good tips how you can approach that too. So yeah, it's not as lengthy perhaps, but I think it's a good starting spot and could definitely be a good support for your trading. So yeah, I think it's good. And trading the zone, of course, definitely as well. Um, so those are good things to look at. We got also previous webinars as well, of course, with Adam Marcus. You can find that on YouTube channel, and you could search for trading psychology or fear, and you'll bump into webinars we've had in the past as well if you want more info.
Yes, I definitely agree. It's a bit shorter than Trading in the Zone, but still it has some good tips. I mean, we don't have really the time now to make a whole book like 200 pages, but still, I think this will be very, very appreciated by traders, and I think that we really did it as professionals. I mean, talking from our own experience and own trading views, and I think the traders will be able to use it definitely. And of course, this is everything that we covered. This webinar is interactive, and I think that Chris and I will definitely do more interactive webinars because this is much more interesting, asking questions and commenting than simply going from slide to slide. Anything you need, guys, anything, feel free to use these addresses, helpme@admiralmarkets.com. Feel free to send us personal emails to torrentialfx@gmail.com and to chris@hotmail.com. You know our addresses. Also, follow us here. Watch our webinars. Don't forget that we are there for you. And final thing, I think this is all that we have to say. I just wanted to ask Chris. He has a few more slides to add up, and definitely, Chris, you will start doing it right now because I will be here to answer if there is any question from a trader.
Great, Mehdi. So let me share those last few things I wanted to share. There we go. Yeah, this is something we discussed already. So, oh, sorry, wrong button there. There we go. Removing fear. So definitely risk only what you feel comfortable with. If this is, I don't want to elaborate too much, but very quickly, is that if you basically trade something that you feel is worth grabbing the money rather than trying to get a good reward to risk, then you're basically going to make bad decisions in the long run. If you think that the amount you have on the table after 10 pips is so much that you want to close those 10 pips, but your trading plan says that you should go for 40, then basically that's a sign that greed could come back as a boomerang and hit you in the back of the head in the long run. So you want to feel comfortable enough with your profits and your risk, in fact, that you can execute the trading plan. Pattern break. Neda talked a bit about that too. So notice your behavior. Analyze when and why you're having certain behaviors that are not supporting your trade, and try to, in the future, recognize those points when you think that you're getting into that bad pattern of behavior, and try to set up an interruption of that pattern. So if you think that you're getting into a moment where you're getting impatient, and that is your behavior that you don't like, analyze when and why that happens. Try to then recognize that next time and interrupt that. Then try to implement a new pattern. So try to monitor when it happens, try to write down that feedback and work on a new routine and develop new habits in a way, and that hopefully will set you on the right track. So instead of like just making a plan and not using the plan, rather try to recognize, change, and then implement smaller changes that actually have impact on how you implement your trading plan. That will be way more effective in a way to alter your behavior step by step. So hopefully this is clear, right? But the new routine, the new habit eventually will become automatic. It will, not from the very beginning. You need to monitor it and you need to, keep at it. You need to keep working on it. But eventually, you won't have to do it, and it will become automatic, and this will go naturally. It will take some time, but definitely you'll get there. So very important too is to be organized, have everything ready, and that creates confidence as well. These are small things, I know, but they help. And being confident in your approach, don't over-risk, and understand the flow and the market structure. I was talking to a trader and through email, I should say, and he was explaining that basically he had some good results, but then a drawdown happened, and he explained to me that that basically he's getting into a situation where he's looking at the market structure rather than just hunting for signals. So, and he's starting to understand that looking at the market structure, trying to find those setups within that structure, as Nenad said, looking for the setups that maybe do not happen necessarily every hour, but have a better quality, like the Euro-Dollar long, which I'll just show you in a second. Is more kind of you have more confidence in those types of setups than maybe if you start taking 5 every 5 minutes or something like that. It's a bit exaggerated, but you see what I mean. So that's going to give you more confidence. Like the Euro-Dollar today, I had, for me, my perspective, I could have even taken more risk on that trade than I would normally allow myself. I didn't, because I still wanted to stick to my risk management rules. But from my perspective, it was a 95% chance that the Euro-Dollar was going up. It was tremendously high from my perspective. All my experience accumulated, was totaled into my analysis that this was going to be a long setup that was going to be profitable. So that was rock solid. I mean, that was easy decision to take that trade for me. That helps, of course, if you find the spots where you have more confidence, where you understand the market structure. And the trader was explaining to me that now he was, when looking at my webinars, understanding why I was talking about certain tools, certain like fractals, and looking at the market structure, and it was starting to make more sense. It was starting to be more valuable as well. So I hope that you will take a look at our webinars as well, the live trading webinars, and start to not only look maybe at what type of setups we might be looking at, but also why we look at that. So last but not least, understand what you're trying to trade, have a clear trading plan, and understand that whatever your trading plan says, you can't control the market. The market will do whatever it wants to do. The only thing you can do is implement your plan as good as you can. That's your job. The market, it's up to the market to do whatever it wants to do. Just as I said, just a quick review on the Euro-Dollar that I just mentioned, and Nenad already also actually mentioned. This was for me a wave 4, a bounce at the 38.2 fibs. So I took the trade right here on this hook back in the morning. It went about 10 pips against me, but then has been going and still is going my way, and it's up, to be very precise, 76.6 pips at this moment, 77, 76. And my target is aimed at this moment at least at plus 129 pips, plus 129. For me, that was an easy one because of wave analysis, the structure. I just had the stop loss. I need to critically think about the stop loss. Was I going to use a tight one or loose one? I went with the loose one. I put the original stop loss at 112.93 or 95, and which was about 46 pips, so probably 93. Yes, my entry was 113.39, and all I had to do is think about the trade management. I let the trade. I saw a 4-hour candle that was going my way, and I immediately, once that was closed, put it to break even. Had patience until that moment, had patience until that candle arrived, left the stop loss at the original spot, but then once that candle appeared, that's it. Locked in at least plus 2 pips, and I left it be for the moment. All right, that was it. Thanks so much for joining. We wish you great trading. Hope to see you in the future webinars, which you can find out here, by the way, by going to education and clicking on Forex and CFD webinars. You'll be able to find more. And of course, MetaTrader 4 platform with the Supreme Edition, where you can find out some of the tools we use in the live sessions. See you soon. Cheers.
Cheers, everyone. Talk to you soon.